why I sell options in intraday. This is basically to capture theta decay in options. And we are selling it in intraday to avoid overnight risk. And with weekly options, it is reasonable to make money 3 out of 5 days of the week. And 58,000 is the margin right now we require to sell one lot of intraday options for intraday. Like 58,000 is enough, and we expect to make 1% a week only. And on days like where there is a decay all throughout the day, we try to maximize profits. I'll give you an example for this. Like on the expiry day on 17th of September, you would have sold a 22,300 straddle. After this red line is a VWAP line, crossed the VWAP line, there was linear decay, like kept on trending down. Like if I was I traded, but if I was trading on that day, like I'm doing recently, I would be adding on position as it kept on trending lower, adding as
Yogeeswar,
it goes to zero.
Yogeeswar, may I request you to maximize this presentation? Okay, can you make a slide view?
Okay, I forgot.
You can press. You can go to slide. Yeah, great. Thank you.
Yeah. This is. I'll keep on adding the position as it keeps on making lower lows.
Okay.
So that way we maximize the profits. And strategies I commonly deploy on intraday is short strangles, short straddles, naked selling, if the trend is convincing as I find it. And these are some data to provide a logic as to why I do this. Like Nifty is in a range mostly, like 85% of the time it closes below 1%. 2020 is different, but 2020 also offered good premiums to sell. And this is to what to expect from what we are doing. Like say our risk reward is 1:1, which is to make 10 points or lose 10 points. We have to be accurate more than 50% of the time to make a living out of this. Like say make a 5%, that's you are already making a living out of this. So you should know what you want out of the market. Like if you're making 15 points, it's more better. And some pointers which I keep in mind before or even after selling the options. IV spike, which is implied volatility spike. For those who don't know what is implied volatility, there are a lot of material available in the net. It's nothing. It's a Greek in the options. Like it shows how much uncertainty is in the market and how the option would be priced based on it. Like if there is an RBI event or suddenly our PM comes to speak, there will be a spike in IV because we don't know what the news is going to be. So market uncertainty will be more, and so the options will inflate. Another practical way which I see is like you put on a strangle or a straddle and it moves in your favor, still you don't make money out of it. It's already a skewed market moves in your favor, still you're not making money. Something's wrong, and this means IV spike is in action already. This is a simple layman terms actually.
Yeah.
And I see RSI charts in individual options. Yeah, I explain all this because these are some things which I always keep in mind so that I'm confident in my positions. I always check these. If RSI is below 40 of any option, and I'm more convinced to sell that option over which is not, because it gives me confidence that this will not spike when market moves against me. Like I'm sell a call and market is coming up. If RSI is below 40, I'm confident that this option won't spike more, like it won't gain premium and go against me. So this gives me a confidence level.
Yogeshwar, let's spend some time on this chart. Let's spend some time here. Now, you said some of the things like you will sell call option and you have selected this strike price because RSI of this particular strike price is below 40. Now, my question first is why you are selecting to sell call option? That means you believe market will go down. So what is the basis of making that judgment that market will go down? Are you using technicals? Are you using some methods to figure out what will happen in the market today?
Yeah, sure. This is just to point out the direction to sell options, like individual options. I will come to that point later.
Okay.
how I collect strikes, how which direction to take. I'm coming to that later. This is
Okay.
just before you get into a trade only, like how the day will look. Like
Uh-huh.
option charts of both puts and calls are not going below 40 only. It's
Hmm.
already a big alarm bell in my mind, because either the day is zigzag, like most Fridays nowadays I see this is happening. The days are zigzag, or options refuse to fall only. Like when they spike faster, but when they fall, the other side won't fall only. So
Hmm.
these pointers I keep in mind even before entering any position.
Okay.
So I'm just presenting it in a way that how I would actually look at the market as an individual, what I'm doing in a regular basis. And this
Okay.
is the example I was telling you, where the RSI of put chart never went below 40, even though market was trying hard to go up. This was an alarm bell for me on that day. So I never sold puts, and market also spiked very badly on that day. Like it fell. So this put actually went over the roof. This I want to just point out such things so that you don't make a big loss when the loss comes. Actually, that's what we try to avoid.
Right.
And
Right. Right.
some more basic some more basic pointers is like I I'm known for option selling, but I also buy options. Mostly when I'm convinced of the trend, I do it. That's because I'm not rigid like most people. Like I will sell options only. That as a trader, you have to be flexible, and you have to change according to what market is saying. This is one thing which actually my mother has taught me well, and she keeps on saying that every time. And as an option writer, I also try to be flexible, and if the opportunity provides, I buy, and if it requires, I also buy and protect me myself from big falls. And I recommend people to watch straddle strangle charts with VWAP indicator. It's not like you can see the price always, or your MTM moves and gauge the price. Like you should know where your charts are. Like, is it a trending down day, or is it in middle? You should know those things before getting into a trade. And ATM straddle loses the most premium. Say Nifty can be at 11,400, 500, anywhere at the open. But at the end of the day, let's say it's at 11,300. 11,300 is going to lose the most premium. And as a intraday option writer, you have to be there 11,300 to make money. And I all my intraday move adjustments will be to get into the at the money options. Like wherever Nifty goes, I will try to be at the money so that I eat the most data. This people will say, how can you know it before? It comes with practice, and as we go through the slides, I will tell you how to get there. And in selling options, like most people say they we have to be neutral, don't have a view, sell neutral and make money. But it's better to be directional so that you have better risk practices. Like if you have a view on Nifty, it gets negated after you have some view and you take a future trade based on it. You have a stop loss for that. Similarly, if that stop loss hits, exit out of your option selling position also. It gives you a good risk management practice. Also, when your view is right, actually you can make more money if you're directional. You can't always be like neutral and try to make more money out of it. The option selling has limited profitability as it is, so you try to make the profits more than while you're losing actually. And I watch global indices very carefully. Like recently, Nifty is actually very correlated with the S&P and Dow. Like intraday moves are almost exact. And India VIX is something all option traders, positional or intraday, should look. Like I don't think so anybody can't look at it if you're trading options. Like say Nifty is in a very tight range and VIX is trending up. It's a sure red signal for me to stop selling options, or just don't add to your positions at least, because a sharp move either way is going to kill you, in my opinion, and you don't want to be there. And on Thursdays, which is I need to say is expiry day, a side must go to zero. Like a call or put in a straddle has to go to zero at the moment because it has no intrinsic value. These are something pointers which you always remember as a option seller.